Hello, I'm Kevin Barry. I'm bringing you the updated 2021 Irish Seafarers Tax Explained webinar. What else do I need to say about it? Okay, this is there's something new every year. This is our 7th year doing this. The big thing this year in particular is COVID-19 and how you document how that might have affected your job, your earnings, or your residency or non-residency position, you know? So even things like claiming the Seafarers Allowance, if you're an Irish resident seafarer, or if it affected your days out of the country if you were non-resident. Okay, so I'll run through that. So I'll get straight into it. Just get the screen up here for you. All right. So the items I'll be covering, more or less in this order I'm going to show you, is the difference between a resident and a non-resident seafarer. Flight crew, we've got quite a number of queries in recent times in relation to flight crew. So I'll get the bottom of that quite quickly. Do you need to file an Irish tax return at all? If you don't live here and you're outside the country earning, why file it? What the Seafarer Allowance is about, that's a tax term. COVID-19, which a lot of queries on that this year. Getting a mortgage, as people move on in their careers, they might buy a house, buy an investment property, you know, what's needed, what do the banks look for, who are the banks who are lending. KBC have just announced they're more or less pulling out, staff are kicking up. Non-residency rules, I'll nail that down for you, I might even give you a few examples. Trading allowances, there's a, what's the word? There is a rumor that they're tax-free. They're not. Latest safeguards, I'll just give you a checklist of the records you need to keep, okay? Just ourselves, it's on the thing there, Irish Seafarers tax.ie brings you to our webpage here. I used to work offshore myself for quite a number of years, and the issues that I was asked about coming on means when I came back, quite a number of clients who worked on ferries, oil rigs, cruise ships. I've been on cruise ships. But anyway, there's a checklist of items to follow if you're working offshore, and I'm familiar with those. So if you check our testimonials on the website, you might know a few of the people there. They're all true, by the way. They're not made up or anything. Right here somewhere. Can't see them now, and I'm looking, but they should be there. Oh yeah, here they are. You think I know that, wouldn't you? Anyway, this is our webpage. The main thing is if someone new is coming on, that they fill out this Seafarer questionnaire, and I respond within 24 hours. And it asks you pretty straightforward questions. Tells me your situation. I can give you your options. So that's the popular questionnaire. So anyway, Irish Seafarers tax.ie brings you to us. If you Google me, Kevin Barry, barryaccountants.ie, LinkedIn, we're on there, on Facebook, of course, like everybody else. So the rules for non-residency, there's a couple of things. I'll just distinguish the difference between a resident and non-resident seafarer first, okay? The resident seafarer pays tax in Ireland. It's either through their PAYE job, if they're working for a ferry or something like that, or if they pay gross and they declare it and they pay tax. If they're over 161 days at sea, though, and they're carrying passengers or cargo, and obviously they have an Irish address, it does entitle them to an extra 6,000, almost 6,500 tax-free. Okay, that's the Seafarer Allowance. The ship or vessel you're on, though, must be EU registered. So we check that on the Seafarer book, and we can cross-check it with marinetraffic.com, which tells us where every ship is registered. So that's how that works. A non-resident person, though, they don't pay any tax here. They might be banking here. They might have their earnings sent in. For that to happen, they would need to be, on average, like every adjacent year, under 140 days a year in the country. So that's 139 days or less. That translates really to coming home for a month every 3 months. You're more or less 8 months out. So that month every 3 months brings you to 120, and it leaves you approximately 20 days for coming and going. Okay, you're definitely working outside of Ireland for a foreign organization and being paid from a foreign location to be non-resident seafarer. So typical people we see are those on the cruise ships, working on oil rigs, oil tankers, just, you know, out on exploration ships, that type of thing. Tax-wise, it just means you're paying no tax here, okay, but you're able to bank here, all right? So the rules for that, there's another old rumor, but it's must be 20 years out of date. The rule was if you were more than 6 months out, the very old rule that you were non-resident, you can forget that, okay? And the first thing is you need to be 6 months out. That is true, but you also need to be under 280 days in Ireland between the year we're in right now and the year before it. But that can flip it the other way. So that's 139 days in or 226 out. And if you add those numbers together, you get 365. So it's quite mathematical. So whichever suits you, you're either 226 days out or 139 or less in. It's both the same thing. Okay? So they're half empty, half full, but the glass only takes so much. There's no looking back though if you're less than 30 days. So in the year we're in, so if this is 2021, if you're less than 30 days in Ireland in this year, it doesn't matter about last year and being under the 280 days, you're immediately non-resident this year. So effectively you've emigrated. So that's one, it does suit certain people. And again, I'm just going to talk about the numbers. So 451 days, okay? And that's the 2-year rule. That's where, again, if you're less than 139 days in Ireland in 2020, 2021, that means you're 451 days out also. So it's in or out. So there's all these numbers flying around. But the one thing I would say, it doesn't all have to be work related. All days count. So if you're on holiday, or you're at a funeral or at a match or anything like that, a wedding, and you're outside of Ireland in a year, that's also counts towards non-residency. It doesn't all have to be work-related stuff, okay? Just to remind you again, the difference is if you're resident, you're definitely going to be paying something here. If you're non-resident, you're not, okay? So now that's all the foreign money, but if you're renting anything here or you get dividends or money out of shares or something like that, even if you're non-resident, any money arising in Ireland would be taxed here. Now, not all of it. If it's investment income, it's a figure like, I think it's the first €3,000 tax-free, something like that. Doesn't come up that much. But if you're earning rent, so now it's only ever the profit on the rent, right? So if you have rent coming in of 12,000, expenses of 6, the next 6,000 will be taxed at 20%. But that arose in Ireland if you were non-resident, okay? So who has to file an Irish tax return? Yeah, pretty obvious. It used to be the Irish resident guys, but I'm finding now with all the strengthening of anti-money laundering that if you're banking in Ireland, so you're sending money home, it's highly advisable to be filing a tax return here, simply because it explains where your money's coming from. So to give you an example, if you're putting, 2,000 a month, 3,000 a month into your bank account, when you open a bank account, one of the things they ask you is your name, address, ID, PPS number. And when money's coming in from a non-Irish location, the banks routinely inform the revenue, especially if it's over, well, definitely if it's over €5,000 of a lump sum. And every now and again, there's an investigation or a trawl. So very quickly, the taxman will tie up your PPS number with what they have on record, and you're filing tax returns. That saves the letter coming out, they can see what you're about. But if you're not filing a tax return, they will inquire. Okay, so if they inquire, you need to have the records right. So the records we highly advise you keep, and this should be no trouble. It doesn't all have to be in paper. I'm looking around me here, very little paper. Scans of these are fine, and just be able to produce the backup. A discharge book is certainly corroboration of the days you said you're out of the country. You need your days of entry and exit, dates of entry and exit. Your passport is a proof of who you are. There might be stamps on there. Payslips shows who's paying you, why they're paying you, where they're located. If you have a contract with your job, that's obviously always going to come into it. Why were you aboard in the first place? What are you doing? The diary's no harm. I have a diary here on the desk in front of me. Okay, and on it, just my own notes, what's going on, but certainly if you can't remember something and you'll look at the diary, no harm to keep it anyway, for other reasons. Receipts, of course. The receipts could be buying flights, hotel stays, just evidence you're in a foreign location. Again, a photograph or a scan. Open a Google Drive account. If you're not familiar with that, ask any teenager, they'll show you. And you can put a little folder up there. Whatever they do up there in Google, it's virus proof, and your items will stay there as long as you have a Gmail account. So yeah, I mentioned the foreign pay point. That's evidence, and you're a foreign employer, and you have a foreign bank account. Now, not everyone has a foreign bank account. I do advise, if you are non-resident, to open an account outside of Ireland, because it's not a legal requirement or anything, but it's certainly further evidence that you're not resident in Ireland, because it's if the tax man is on your case and doesn't fully understand the rules, because sometimes there's a lack of understanding. If they see you banking in Ireland and attending the All Ireland or attending certain events here, they might say, well, you might be out the days, but you're really resident here. You voted in the election. They have all this type of information. So it's no harm if you open an account in Gibraltar with Lloyds or Barclays, or I think Investec have in the Isle of Man. It's just if your wage has been paid in there and you just send home whatever you need, further corroboration you're not here. I do like that. If you're married and your wife is here or husband is here, if the woman is abroad, definitely file separately if you're non-residents, you know. But even if you're married, you'll be on that separate tax return as single. So don't get worried that someone will think, God, must think I'm not married anymore. It's every non-resident files as a single person. And I have quite a number of people who might just have rental properties here in Ireland who are definitely non-Irish. I have a Luxembourg couple, for instance, husband and wife, they file 2 separate tax returns on it as single. And that's just the way it is. If you're non-resident, there's no other option. Keeping track of your days. So even if you're home for your month every 3 months, every holiday is a business trip, so keep track of those days out. If you're held up, is another issue. So when the ash cloud was there, or once there was hurricanes, people couldn't fly out to Miami and this type of thing. If you're held up over bad weather, document those days. I should have left on the 1st. I didn't get out till the 3rd. And the ash cloud held up people for months. Okay. I just mentioned the Seafarer Allowance. Now I'm coming back to the resident seafarer. So if you are living in Ireland, say month on, month off, you will get a discount on your tax bill of that amount, as long as you're on an EU registered ship and you're 161 minimum days at sea in a January to December period. That's an important point. And that ship needs to be pulling into a foreign port. In Ireland, an oil rig is a foreign port. In England, or sorry, UK, it's not. But we're just dealing with the Irish. So if someone tells you an oil rig doesn't count, it does. Okay. And obviously, that's be a reason to go there. So carrying passengers or cargo is that. All right. New thing, it's not that new now. It's in about 3 years. Fishermen, who are share fishermen, they get an extra tax credit, which is knocked off their tax bill if they're residents. But that wasn't there until the last few years. But I like to bring it up. So that's what the Seafarer Allowance gets you. So even on our own website, I mentioned that. A lot of people asking about mortgages at the moment, and the banks are lending. Like in the last week, well, 2 weeks anyway, one client got an offer from AIB and Bank of Ireland, and he went with the Bank of Ireland one. I know AIB have lent to many of our clients, and EBS, of course, lately saying if we have people working offshore with secure contracts and dependable income coming in, they're looking seriously at that market. So there's 3 tips. If you want any further referrals, let me know. So, but 3 years proof of income, you need to have that. So whatever about accounts and pay slips, they also need to know about your tax record. And if you're a non-resident, certainly filing here, showing all those zeros on the tax return. So you've sent in, you've declared what your income is, why it's not taxable here, and the tax man comes back and says you don't owe me anything. Okay, bank statements will be further evidence of that. Certainly if you're looking for a mortgage, once you get the mortgage, you can bank wherever you like. But leading up to it, you're better off banking with one of the main Irish banks, okay? And obviously save it. The more deposit you have, the less you have to borrow. Through bitter experience, I've found that the more you borrow, the more you have to pay back and the more pressure it puts on you. So, the bigger, if you don't need a mortgage, even better, but that may not be practical for years. And once you have the mortgage, then there's another webinar on here on how to pay it off in 7 years. So a few little habits you get at, and you don't feel the years passing, okay? The shorter the term, the more you might pay, but the less interest you'll pay. So just mention a very brief point. If you pay 200,000 for a house and you borrow 150, you won't be paying back 150. You'll be paying back over 20 years. Multiply your mortgage repayment times 12 times 20. It's a lot more than 150. So, but that's a whole different situation. Okay. Don't be surprised when the mortgage people ask you to take out life assurance. If something happens to you, they're paid off. That's every mortgage company will want that. You can shop around anywhere for that though. The keen for you to buy for yourself. All the Irish banks are very burnt in the crash on rental property. Now it seems like a distant dream now that there were so many properties to rent that they couldn't rent them and rents got low. But that's all changed. But certainly borrowing for your house is key. If you're Irish resident, by the way, and you rent out 1 or 2 or 3 rooms even, but as long as the total rent is under 14,000 or less, there's no tax on that. So if you need help paying the mortgage, and say it's a 3-bedroom house, you're renting 2 of them, 2 people in there are paying you 7,000 each, but then that's tax free. 1 cent above that, you have to have your rent minus your expenses, and you'll pay tax on the profit. It's called the living rental room allowance. Yeah, right. Little safeguards I'm going to point out for you, just in case you think you're caught. And what I mean by that is you think you might trip yourself up. When you land into Ireland, whether it's by plane, so you're coming home, or it's by boat, if you pull up, as long as you stay within the confines of the port, so the airport you haven't come through arrivals, or at a seaport, if you stay within the confines of the port, you're not here. So if your ship pulls in at Dunleary, but you don't get off the ship over the weekend and go back out to Britain or to France, but then you're gone all those days, right? You're still at sea, in other words. So it can be docked in Ireland. And yeah, so that's an important one. The other important one is that if you stray into Ireland at all, so if you're in the north and you drive, so I'll give an example, you're in Balik in County Fermanagh, you drive into Ballyshannon and buy some petrol, or even stray 100 meters over the border there and drive north again. That 15 minutes you're here in Ireland all day. So that's how people get mixed up on their rules. And you might think who'll find out, but you'll be surprised what an ATM card or a bank statement or credit card or phone roaming charge, you just don't want to get into this. So this thing about being out by midnight is a British rule. It doesn't apply here. So if you're here at any stage, you're here, So you don't want to get the days wrong, plan ahead. Okay, but any time here at all, once you're here. So if you fly in at 11 o'clock at night and come in through Cork Airport, might be 11 o'clock at night, you're here. So stay the other side till after 12 for your own, just to have that extra day. It just might get tight on you, okay? So that's a big thing we see, people just get mixed up on the days. Yeah, if you're non-resident and you're not paying tax here, listen, saving is good. A big sales tool of many pension companies, you'll save on tax, but if you're not paying tax, you've no tax to save on. So a saving scheme or a mutual fund, they've loads of these as well, is where you want to go. It's easy to put money into a pension. It's not that easy to get it out, you'll see what I mean if you talk to someone. There's money that has to be left there till a certain age if you don't have a certain amount of this type of thing. Yeah, the bad weather days, just keeping, people forget. So if you're held up over something, at the very least, document them in your diary, but very good to get an email or a letter off your boss to say, we understand you're delayed over massive storms or ice. Like once I was in Shannon, and when I arrived down there early in the morning to fly to the States, no planes had arrived in from America due to massive storms there, so nothing had taken off. So had I been day counting at that stage, I would have been here a day longer because as it turned out, I flew to London, I just overnight, flew out, but you get the point. There wasn't that many flights to London, and loads of people got stuck for an extra 2 days in Ireland before these planes arrived. Okay. Yeah, no harm to have illness insurance. Apparently, statistically, more people are likely to get seriously ill before the age of 50 than die. And if you can't work for a year or two, this will pay out like a lump sum so that you at least can keep your bills paid until you get back on your feet. So it's called serious illness cover. Google it, and I can refer you to some very ethical people if you want to have someone do that. And but like Google it and get an idea. But it's small money for these things, and especially when you're younger. The older you get, the more likely you are to pick up something, and so it's a bigger premium. But certainly, if you're under 30, take it out. It might be 20 quid a month or something. It's the best 20 quid. Same with health insurance, VHI, Bupa. Get them. You'd be surprised how much you will need that. Voluntary PRSI. Now that's obviously for the Irish social welfare entitlements. If you're here working the job or in college and you're about to go non-resident, it's worth 500 quid a year. That's the fee. And send away the form. It's called a VC1. I'll just get it up here. And that's called voluntary contribution. It just keeps you in the social welfare system in here. So like they are now during the pandemic, there was this initial 350 a week PUP. And after, and a few of my seafarer clients at the very start, you see they give it to everybody. But after a little while, a few of them got letters saying you don't pay into the system, so we're stopping you on it, you know. And but the ones who were paying into that obviously continued. So, but I just Googled VC1 on citizens information, and it's a form. We do it. There's a 50 quid fee with us, but you can send it in yourself. And we'll write back to you. If you need someone here to keep an eye on it, that's where we like to us come in, you know. We see here, it's all talking about it. Okay, there's the VC1. And I'm going to show it to you now. That's what it looks like. Like you have to fill in some stuff, but it's only 3 pages. Well worth sending away. Okay. So if you miss a year of paying into the PRSI system, you can't get back in unless you become resident for at least 1 year. So if you're gone for the long term, you're not getting into this. But if you're in it before you leave, or within a year of you leaving, you can stay in. All right. Yeah, certainly. This is one people get caught on. So some people think they're non-resident and they're paying tax in the UK perhaps and PRSI. So when they come back here, they find they've got to redeclare the same earnings again. Now it is taxed a second time, but the foreign earnings are knocked off it, but you will end up paying the USC. So just to explain, 3 forms of tax. There's tax as you know it in your head. There's PRSI, which goes towards social welfare entitlements. It's taxed by another name. And thirdly, there's this universal social charge. So brought in during the crash. I don't remember which government, doesn't really matter. And the idea was everyone pays something. So even if you're paying UK tax, it wipes out what your tax would have been here. You'll end up paying that USC, and it can be substantial enough. Okay, now I come across a lot of non-resident seafarers, especially working out of Britain, get a medical card. They wouldn't get it here, but they get it there and they'll cover them here. So look into that. And this thing about how far out do I have to be non-resident? It's 12 nautical miles, and that's more than 12 miles on the road here. So yeah, get the offshore bank account. It doesn't have to be day one or anything, but long term, I mean, you declare these things, you can show what's in it, but it's reinforced with if you're non-resident or what's going on. And there's just Google the offshore bank accounts for seafarers. It seems to be Lloyd's and Barclays, 2 very credible banks come up all the time. Okay, so just remember keeping track of those bad weather days. Now the COVID-19 really messed up a lot of people. There's cruise ships tied up, oil rigs parked, loads of people, divers told go home for now because everything, you know, we're not doing crew changes. A letter from your company corroborating the days you were held up getting back offshore. I have lots of lads who are third officers, second officers and girls, people on super yachts, couldn't get back out, chefs, etc. Certainly now when you're in the job, when you've been interrupted by these things, is the time to get those letters. Not 3 years from now trying to find the people you work for then to look up stuff. They're not going to have interest. And so you need to get these now, but certainly get that. So just writing in diary isn't enough. You need to have a third party. It's just if you're asked about it, you need to produce this. Okay. I'm coming across a few seafarers who, for some reason or other, aren't keeping a discharge book. Definitely have some, in fact, I mean, get the discharge book, right? And yeah, another one is if you have an Irish bank account and you are living abroad and you do have a foreign address, is to change the address on that bank account. Just further corroboration of what's the reality, you know. Keeping records in a Google Drive, I know I've mentioned that. It's just me or any other accountant can access them with your permission, all right? Or else we can give it to you and vice versa. Yeah, the training allowance. Now, scholarships, or if you're the recipient of a bursary and you're in the maritime college, for instance, that money is tax-free, scholarships and that. But a training allowance from BP or from Chevron to train as a someone who's going to be working on the bridge or marine engineer is not technically tax-free. So the first 8,000 is tax-free, all right? And it might even go higher, tax-free amounts, but certainly don't have it in your head that this money is tax-free. So if you're getting 2,000 a month, there will be something to pay in it. Okay. Just the thing about split year updates. Split year is when you're leaving or even coming back in, but I generally find people are leaving. So remember I said you have to be out the X amount of days. So they're less than 139, but let's just say it's September and you get a job and you're going off to sail around the Pacific on an oil rig. So if you left in September, you can declare I'm non-resident from this point forward, but to confirm that you must be non-resident the following year, okay? So the way to be absolutely certain of that the following year is to be under 30 days. So then you don't look back because you might hit the 450, but you must be non-resident, okay? And it's a mathematical thing, but certainly if you left, say, in February or March, between the 2021 and 2022, you'll probably hit your 451 days out. But if it's later in the year, you might have to be out a bit longer than that. Now, if you can't make it, it's not the end of the world. You pay tax on the first year's money, and the second year, between the second year and the third year, you get out your 451. So there's a bit of a build-up required, and be aware of that. Yeah, this UK waters, so Ireland versus the UK, North Sea. Just remember I said 12 miles out, that's it. 183 means more to the UK side than it does here, just to remind people of that. If you do have the medical card, remember I mentioned the 3 tiers of tax? Well, this USC, which everyone who is, if you're working outside of Ireland, but you're a resident seafarer, you will have to pay this USC, most likely. But if you've got that foreign medical card, it cuts the bill by 50%. Well worth filling out the form. If you're paying UK national insurance, by the way, you don't have to pay it here. You can if you choose, but there's no need, even with Brexit. I'll give a couple of examples. I've had these before. This girl was in Dublin on 50,000 a year, working away. This is a true story. And she moved to the Caymans in January of 18. No intention of coming back. She was less than 30 days here on the same money, and she saved that amount in tax. Okay, 14,177. So there was no looking back. She was immediately just emigrated to a tax-free zone. With Caymans, there is no income tax. Okay. The other guy was working for BP. These two didn't know each other or anything. Month on, month off. He was over the 6 months out, but he was less than the the 451, which is he was less than 225 days out a year, which would have gotten it close to it. But he did qualify for the Seafarer Allowance, and that was what he paid, that amount. So it's, if you have the opportunity to kind of build up a deposit because you want to buy a house, knowing these days is a big one. That lady came back since, and just the split year coming in. So she was 270 days out of Ireland in 18. Now she intended to be more than that. So she was basically, between the 2 years she was gone, she was out enough that she didn't have to pay tax on the earnings. She was over 451 out, okay? This other lady, self-employed engineer, good contracts. But when she was in Ireland, that's what she was paying in tax. No small change. But she formed a limited company. Now, there's a rumor that the profit on Irish companies is 12.5%. That is true in many cases, but if you're a professional like this lady was, the tax on profit is 19%, called the professional services surcharge. Google that. A lot of people don't know about it. It applies to a lot of professions. And basically, yeah, if you're kind of one-man bands in your company, there's a higher tax rate. Okay. Certainly from her point of view, instead of paying massive income tax, she only paid tax on what she took out of the company. So she still paid tax, but massive savings, saves that amount. All right. Just by leaving money behind to the company, that's what makes the difference. Okay. That's what I mean there by change. So if you can live on less than what you're earning, that's where it makes a big change. All right. So keep track of your days. Now, when you emigrate, you're meant to file for the next 3 years anyway. Now, the rule is there. I've never seen it enforced, but just so you know, it is there. And yeah, just on the married versus single, like if I typically see a wife might be the one who stays and raises the kids, she can still get the children's allowance, pay into the Irish social welfare system, needs to file her own separate tax return though. And that's when her husband might be non-resident. That's be typically what I'd see. It doesn't have to be that way. It could be the other way around. But the non-resident person, working abroad, paid from abroad, and performs the services outside of Ireland. Flight crew. The main thing with that is on our website, where's it gone? Find it now for you. Yeah, on here under the 1 minute blog, down the end, I've read a little article. Picture me there, aren't I beautiful? There's a plane in it. You see, well, I'll show you what's on it, which is more important. Number of these articles here. God, I can't find it now. Look down the end. Oh yeah, here it is. Seafarers and flight crew. So if you go on here and talk about it, you can email me, but I actually produced this. Okay. This is from the taxman. Hasn't changed. So basically, if you're Irish and you're flying with Ryanair or Aer Lingus and you live in here, you're paying tax on your earnings here. Okay. If you're not Irish but you're working here, you're paying tax on your earnings earned here. Okay. And or if you're living here and you're earning abroad, it's only on what's brought in. It's called domicile. And if you're not from here at all, when you're internationally flying, you're just in and out, unless you earn money in Ireland, it won't be taxed here. So if you're working for American Airlines, okay, and you're getting paid from the States and you're in Ireland a good bit, unless you bring the money in here and you're here over the days, you won't be paying tax here, okay? Because you're not from here at all. You didn't earn it here. So it's called domicile, which kind of means your center of being. So just be aware of that. So worth a read of that item. So don't forget about this force majeure, like COVID is still here, people are getting vaccinated. I'm well aware of many of the clients are severely disrupted by it. So just keeping track of that and don't think, I can get it whenever I want. You'd be surprised things change. Just fees for filing. People ask what's it cost. The first year tax return, including VAT, that will be the fee. And every year after that is lower. And why is it lower? It's just on the first year, there's a lot of setup you have to do for the ID stuff. Then you have to check back on it, not so much this year, but the year before, what the background is, the lead up to it, that questionnaire. If we get all that background stuff done, and really once that's done, you don't have to do it again. So following year, we just look at that and slightly update it if necessary. And we just get into the days of entry and exit, corroborating the discharge book, keeping track of flight tickets. That can be very handy just to have them on file. Detail of earnings, pay slips, if there's any foreign tax paid, where people were, all that type of thing. And if you're going for the company, you want to be allowing 500 euros for the company to be set up, the bank to be set up, and the tax registrations. And depends on how the activity, but be budgeting €1,000 a year for filing abbreviated accounts with the company's office, filing accounts with the taxman, maybe keeping online. We're huge supporters of the QuickBooks program, having you online so we can keep track of money in and out. Yeah, we connect up with your bank and the bank sends over details of what's going in and out, and we just make sure you have all the receipts. So you want to have that in your head anyway, but every case is different, so you might be lower or higher. So don't be afraid to relook at this. Plan your year ahead. We call it the residency recipe, whether you're non-resident or resident. So if you're a resident, can you get to the 161 days at sea? Keep the records. The more you know, the easier it is for me. So we're big into education. That's why you're on this. And if you want to send any questions in, just email them. That's our free phone number there if you happen to be in the Republic of Ireland. And if not, I'll put our number up on the screen. It's a direct dial from offshore. But either way, if you email, just log on to that. It'll bring you to our website and make contact. Or you can book a consultation. We have that facility as well. And you can book a Zoom if you want to go through something really specific. And we record that, email it to you. That's €75. Okay. So I hope you found that useful. Back up to date now with the 2021 one, and chat soon. Thanks very much. Bye.